Hey, good morning, everyone. It is Monday, September 23rd. It is also a national holiday here in Bulgaria. Hope everyone's doing well. And let's take a look at what this week presents for us. Ooh, excuse me. We'll take a look at what's going on this week, and then we'll take a look at the plan for the equities to start the week off as markets are still trading in balance. They're trading into highs, right? Other than the Nasdaq, but we'll mainly talk about S&P. And we'll break down some of the news here. We've got some Fed speakers this week. That's going to be an interesting path. We also have some more inflation data. But first and foremost, Intel. Intel has been in the news a lot, right? We've seen talk of Intel a decent bit here as we've seen that Intel has fallen from grace, right? Massive downside momentum from this year. From the peak of 2024, I believe that Intel to the peak to the downside is down about 63%. So a very significant downside move here. And once considered a huge major force in Silicon Valley, in recent times, Intel has been marred with technological and financial struggles. So it has prompted thousands of layoffs, a suspension of its dividends, and a pause in factory projects amid a costly foundry build-out. So shares of the company lost, like I said, about 63% in 2024, so it's no surprise that rivals are looking to scoop up some company assets at cheaper prices, and reports have surfaced that Qualcomm has approached Intel about a potential takeover. While a deal is said to be far from certain, a transaction like this could benefit the billions in government grants and low-cost loans lined up for Intel, but face scrutiny from antitrust regulators. If not the entire company, Qualcomm has also said to have been considering various parts of Intel's design operations, particularly its client PC design division, I mean. And that's not all. Apollo Global Management, APO, seems to have thrown its hat in the ring as well. According to Bloomberg, Apollo has offered to invest about $5 billion into Intel, with the latter currently considering the proposal. So also Broadcom's AVGO name has also come up, with advisors continuing to consider potential bids for chip makers to make the most of the current situation. So antitrust concerns exist, but may be manageable, particularly if the foundry business is spun off as planned. Kumquat Research writes in Intel and Qualcomm a solid merger match. Aside from an unrealistic $90 billion price tag, the merger is likely to encounter significant regulatory, financial, and integration challenges, counters KM Capital, pointing to discount cash flow. I do not want to be boastful, but Intel stock has lost more than 30% of its value since I shared my strong sell recommendation in May, right? That's what they said, and it's an interesting pick. This is one of those like boomer names that was more so useful for dividends, but now the suspension of dividends is getting a lot of people away from the stock, right? A lot of people might look at this and say, well, it's extremely heavily discounted. It might be in for some kind of decent rally, but over the last multitude of years, right, we're down back towards that 2013 low. So they're in quite a pickle realistically. Now, in terms of other news, right, major bank news, in a move that can unlock financing for the industry, major global banks including Bank of America, Barclays, Citi, Morgan Stanley, Goldman Sachs are set to pledge support for nuclear energy while nuclear project funding complexities and risks remain. Experts say that the public show of support has been awaited given the critical role in nuclear energy can play in the overall global energy transition. So remember that Microsoft just signed a 20-year deal to revive the 3 Mile Island nuclear plant to power its data centers. In terms of the big banks, right, we saw a decent fall off. When was it? I believe the week before last, if I'm not mistaken. After some news from these banks, but ever since they've started their rally quite decently here. And in terms of some of the other news that we've got this week, we got a lot of Fed speakers that are going to hit the wire this week, which is something to note. There are a few factors here. Let's just see if there's any other news that I want to discuss. Not necessarily, but in terms of the Fed speakers, we have Fed Bostic that has already come on the wire, I believe, at 8 a.m. this morning Eastern Time, looking at the economic outlook. At 10:15, monetary policy by Fed's Goolsbee, and then at 1 p.m., Fed's Kashkari is speaking about, I'm not necessarily sure, but Fed's Kashkari is coming on the wire. We also have into the rest of the week, we've got Jerome Powell coming out on Tuesday, which is tomorrow, right? Jerome or wait, sorry, not tomorrow. That's on Thursday. Thursday. Sorry, apologies. Jerome Powell's coming on the wire on Thursday, right? He's got a speech that starts off pre-market 9:20 a.m. Eastern, which is going to be impactful. And then we got Fed's Kashkari that same day at 1 p.m. We've also got Fed's bar at 10:30 a.m. that same day, and then the PCE, the core PCE data, the Fed's favorite inflation gauge comes out pre-market on Friday. So now that we're past the Fed last week came out cut by 50 basis points. We're out of that blackout period, and the Feds just keep coming on. So we're going to expect, well, this week starts with a decent amount of Fed speakers coming on the wire, which can present some kind of market movement and volatility all throughout. So it's important to know when they speak. So we'll see decent little rotations from that expected, and then we'll go from there. So keep in mind, Fed speakers this week, along with Friday, closes out with the PCE, the inflation data, Fed's preferred inflation gauge, which is expected to have some movement. Now, this is one of the key factors. These inflation data points, as well as like big data points that we might see going into the future, if they are weaker than expected, right? If these data points are actually worse off than expectations and prior data points, it's most likely going to create a larger bearish reaction in these markets, because the Fed has now cut 50 basis points. So they're on the front that everything's hunky-dory. We're good to go. Keep pressing along, right? We're in a good standing to be able to cut 50 basis points. So now, if the inflation data, for example, because that's one of the big factors that's alluding to these cuts, if the inflation data isn't as great as expected or better than prior, you're going to see a tumble in these markets. So a big factor to consider when watching these reports going forward, along with these rate cuts that are expected. Now, when we talk about the equity market here, the S&P 500, what do we got cooking overall? We're inside of the all-time high balance right now. We penetrated it last week going into Thursday, right after the Fed event. The Fed event had some kind of bearishness into it, and then huge turning point on the overnight session, and now we're trading between 57.43, 45 area, and the top band 57.80, 85. So we're officially 100% trading the Z contract. There's no question about it. The U's expired last Friday, so everyone should be on this contract. All the prices should be the same. And the key aspect to start the week, yeah, we got some Fed speakers which can shake things up, but when we're trading inside of a balanced area, especially into an all-time high balance, I don't necessarily love that in terms of setups. It's mainly going to be one of those things where we watch if there's any kind of expansion. Otherwise, like the medium probability trades are trading the top and the bottom band of the balances to hold within that balance. So if we escape above 57.85 on the ES or below that 45 area, sure, right? The expansion is a little more expected, where to the downside we come into some very heavy volume to explore, like the 33s as well as the 57.10s and lower. So that's going to be the main faction here today that I think people should look at. The expansion, otherwise you're trading in a balance, and lower probability movement as you trade within that balance. So like getting too touchy inside of that balance can present some nasty stuff, right? You can get chopped up. That's why these are compressive periods. A lot of volume accumulates there where traders can get diced up, and we're looking for those expansive moves that happen. So that's what I'm looking at today. I'm not leading one side or the other right now. It's obviously structure is bullish. There's bullishness in this right now. So you're probably better off looking for some of that long side. But if we fail the top of that auction where a lot of people got trapped over the last several days, then I'd be very careful buying dips continuously. This thing can rummage through some auctions to the downside. So with that being said, I hope you all had an amazing weekend. Check out our latest YouTube video that I posted on Saturday. And I'll see you all tomorrow. We'll probably do some streams throughout the week this week, right? We got some other news that's coming out. And I'll see you guys tomorrow to wrap up, see how the market shaped up today. Fed speakers, and as we chug along towards Powell on Thursday and PCE on Friday. So check out community.tradeproacademy.com for our open Discord, and in there we'll be doing some live streams this week. So I look forward to it, and I'll see you guys on the other side. Happy trading, good start to the week. I wish everyone trades with very tight risk management in mind as we start off a new week. It's always good to see how this thing shapes up before getting too active. So I'll see you guys later.